My strategy in the beginning to truly grow an account was focusing on just high quality trades.
Brando Lee is an options trader for 14 years.
Growing his account from $6,000 into $10 million.
Most of the times where I was wrong, I was entering trades I didn't really understand, meaning I was entering because I had FOMO. I was entering because I didn't want to lose, and then I would enter trades because I was just greedy.
What advice would you give for the trader who does overtrade?
So what I found out is that
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be the Trader. Today is a great day because I have my man Brando, aka the Elite Options Trader. He's been trading for over since 2010. Is that not right, Brando?
you got it. Yep.
And so I wanted to bring him out here because he dives deep into options. He likes to trade the large caps, mid caps, and mega, top 20 stocks he always likes to look at. And I wanted to bring him here to really share his story because so many people have seen this guy on Twitter or AKA X, and he shares great information. So I wanted to bring him here so he can share it verbally and help all of y'all out, because I actually checked out one of his spaces and it was really, really nice. So Brando, welcome to the show, brother.
Thank you for having me. Appreciate it.
Absolutely, bro. So, what got you into this world? Like, how did you enter the world of trading? Can you take us back to like day one?
For sure, yeah. So basically, I was about 19, 20 years old in undergrad, and I had a friend in class that was always on his phone. And one day I asked him what he's doing, and he was like, "Hey, I just made $300 a day." And I was very curious because, as a student, I had no money. You're basically broke, you're
Right.
trying to live day by day. And he kind of showed me this world of, if you put X amount here, you could make this much. And immediately I got sucked into finance, stock market, trading options. And basically I was on track to go to med school, and my friend as well. And he graduated, went to med school. I graduated. I decided I want to continue to trade. So started with about $6,000. I was working as a painter.
When was this? What year again?
So this was so I started about 2010, graduated about 2012, and then 2013 is when I finished up school and kind of just went down this road. So yeah, started with about $6,000. Worked as a painter, worked as a dishwasher, also worked at Lowe's. Just kind of got as much money as I could together. Started with $6,000, and by the time I was about 23, I made my first million, which was a lot of money at that age, but also a lot of money at that time, the buying power of $1 million. So yeah, so
and that's 2013. When was that? 14?
So 2013 is when I made my first million. Started trading about 20 years when I was about 20. So did I keep all of that million? No, right? Because you have to, because number one, you have to pay tax. And number two, you're a young kid and you want to spend your money. So, went through that phase of living that lifestyle, buying this, buying that, going out, doing this, doing that. And, quickly learned that you can spend it just as quickly as you make it. But from 2013 all the way till now, I've cultivated a very simple strategy of trading support and resistance levels, and basically just focusing on breakout trades. It's a very simple strategy. The hard part about implementing it is just having the patience to wait for the right levels. So waiting for, let's say, SPX 5,000 or 6,000, very, big levels in the S&P. If most people just waited for these levels and they knew exactly when to take it during those trades, you could make 5x, 10x your money, just depending on the option strike you choose. But the big issue I see with most traders is they don't have patience, and they want the money now. They want fast money, and they don't want to actually learn how to trade properly. But yeah, if you can be patient, you can wait for momentum. That's how you make the big bucks.
Someone asked me, what's the most important thing you want in a broker? And I said, great customer service, fast execution, a large number of locates for hard to borrow stocks, low prices on locates, reasonable commission, and rebates on routing. And that's why I use Cobra Trading every single day. They excel at everything that's important to me. Sign up now by using the link below, and Cobra Trading will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. So what are you waiting for? Work with the best just like I do and click the link below. You know, what I'm curious about, I was trying to catch you where you said 2010 you started, or you is when you started trading with 6,000.
Yeah.
Right? And then it took you 3 years to make your first million.
Yeah.
Correct? Now, take us, was it like immediately you opened that account in 2010 and you start making money? Like, can you paint a picture there? Because before then you weren't actively trading, or were you? Or were you just looking at the market? Could you give me some idea?
Yeah, so 2010 I started to learn, but I had I had some money, but so I would say I got lucky my first year. So my first year I turned 6,000 to 100,000. But I
Okay.
would attest that to luck being in some penny stocks, some options trades, and just kind of timing the market in a weird way where I would say I kind of just would say that's me being lucky.
Okay.
But
Okay.
I would say me having a more systematic approach happened during that third year, to where I realized that most of the big trades I made the first 2 years where I made money, it was only from a handful of trades, right? It wasn't me trying to jump in and out every day and make X amount and have a dollar amount goal. It was more
Okay.
of, okay, well, I'm looking at like the history of one stock or the history of the S&P, and I'm kind of just looking at these patterns of, okay, well, when it broke this level, this is how much it went up. Or when this stock broke this, whatever the level is, this is how much the stock went up. And that's when I realized that I think most of my gains are going to come from these type of trades. So the first 2-3 years, I would wait days to weeks at a time for just one trade,
Mm,
versus like most traders are like, okay, I want to make $1,000 a week, or I want to make $500 a day. But every day the market changes, right? The risk reward level, the opportunities. So
yep.
to me, I realized that you can only take what the market gives you. Like, you can't say how much you want every day and actually do that consistently. Like, even for me today, right? I'm trading with tens of millions of dollars. There is not one single day where I make the same amount. Even if I try, I probably could do it, but you're taking excessive risk to hit some random dollar amount that you
Mm.
probably shouldn't be. The trades you're in, trades you probably shouldn't be in, just to hit some random like dollar amount goal.
Do you mean like, so you really don't try to have a monetary goal in terms of a daily limit, or a daily limit that you want to hit per day, because the market, you get what you're going to get? Is that what you kind of mean?
Yeah, exactly. Yeah, like you kind of look at the market for what it is as objectively as you can, and you assess what type of opportunities are in front of you, and then you ask yourself the question first. Is it even worth me trading today?
Mm.
Right? Like, for example, today, the market had a huge gap down. Right, the S&P gap down 130 points. QQQ is down 18 points pre-market, which is the Nasdaq, and
And
I asked
today is
myself the
January 27th, just FYI. Just for
oh
everyone
yes.
who's listening, if you're watching, January 27th. Go ahead.
Yep. Thank you. Yeah. And the first question you have to ask yourself is, okay, with the market gapping down so much, is it even worth for me to take puts? Because how much more can it go down after an 18-point gap down in the Qs? Or how much more can SPX move lower after a 130-point gap down? And taking puts on today, Monday, January 27th, was the wrong play, because the market held up and the S&P reclaimed 6,000. And then the Qs also went from 510 to 514 during the day. So that's the first question every trader needs to ask. Is it actually worth me trading the direction I think it's going to happen? Right.
Mm.
And if the answer is no, then don't trade. If this answer is yes, then you need to just look at the support and resistance levels and consider trading off of them.
So explain what you mean by consider trading off of them, because some people might hear that and they're gonna they can come up with many different ways of what that means. So could you explain that?
Yeah. So for example, like we'll use the S&P for today. So when you look at how much it gapped down, right? SPX closed at 61.01 last Friday, January 24th, and then it opened up at 59.63. So when you look at your chart, and I'm assuming most of the people listening or traders have an idea of the support and resistance levels listed on their chart. So when you look at the gap down, you look at the respective levels now. Where is your next support level, right? And hopefully it's a level that lines up with more experienced traders that you know, right? It doesn't need to be a made up level. It can be a level that lines up with, let's say, me, right? And I have the same support level as you. So when you look at the gap down, you look at, okay, where's the next support level? And to me, the level is 59.73. So for me, the risk reward is to the upside now, meaning, okay, it's gapped down 130 points. Can it really go down 200 in one day? It's possible, but the probability is low,
Hmm.
right? The probability of that happening in one day in the history of the S&P in the past 5 years is very low, like less than maybe 3%
Yep.
chance happening.
So
So
do you focus? Go ahead. Sorry.
yeah, so then basically like as S&P bounced up at the open, it reclaimed 59.73 and it went up to 60.17 within like an hour and a half. So that's one way to trade.
A lot of people are going to hear you say the words like, play around those support and resistance levels. Could you elaborate more on that? Because I don't want people just having the wrong conception or idea that you're trying to explain.
Sure. Yeah. So basically, when you are looking at a chart, for example, the S&P 500, there's going to be important support and resistance levels. And typically, I'm using a daily chart, right? And you see all these different levels on the chart. And when you're trying to figure out whether you should trade or not, or whether you should trade calls or puts, you have to analyze how much the market has moved the day before and the current trend in the market. Like for example, last Friday, January 24th, S&P closed at 61.01, and we had news over the weekend involving DeepSeek, and the S&P gapped down to 59.69. So when you look at how much the market's gapped down, you have to ask yourself the question, how much more can we move lower in a given day? And 120, 130 point move at the open, the probability of it going even 30 or 40 more points lower is the probability is low, right? In the history of the S&P, if you look, there's been very small amount of days where it's moved more than 200 points to the downside in a single day. So to me, I would trade the upside, and you have to look at the support levels of where the market is at, the S&P is at when it gapped down. And the next big one was 59.73. Is this level precise? It doesn't need to be. It just needs to be a general range of where you think the next support is. There isn't an exact precise level for any stock. It's just more of a range. And if these levels line up with a trader that you respect or a trader that you follow, and you see that multiple traders have the same level, then typically it's usually the right area where you want to consider either trading puts or calls. And since the market gapped down so much, trading calls at 59.73 was the right play. So this is a 5 minute chart, right, for today. Everything to the right of the horizontal line is Monday, January 27th. So we opened at 59.73, had a quick dip to 59.62. And one way to trade is you understand that 59.73 is the next big level. If it reclaims a level, then you can consider calls. And SPX went from 59.73 up to 60.17 intraday. So you could have caught, what is that, 30 something points during the day on SPX, which is pretty good for if you're trading zero DTE. So
That's
so yeah,
interesting
that's
because I like that you clarified that it's not, because you don't have to have precise. There's no such thing as precise levels. and you gotta, it's just respectable within the range, or you just kind of wait for it to kind of form something. But I like how you shared that information, man, showing the levels and how you explained that each level doesn't have to be precise, if you will, and they can be kind of like just an area, because a lot of people do accidentally, I would say, just assume that they're like hard walls every single level, and that's just not the case, especially with the markets. But going back to your story, I'm very curious on 2010. You said you got lucky that year, and then 2000, after that, after that, you mentioned that you analyze your work, basically all your trades, and then try to figure out which, and you found out that a handful of them made your year.
Yeah.
What I'm curious about is like, what happens next? Like, are you risking the same that you were risking after that first year? Did you know you were lucky, or did you not know? And you're like, oh, I got this. Let me just now eliminate all this other stuff. And did it just like turn on right away? Like that next day, like you turned it on right away and just immediately grew? Like, could you explain that?
Yeah. So that first year, the number one thought, like I said, is I thought I got lucky. So
Yeah,
the second year, there's a lot of doubt, of course, and there's a lot of like uh, imposter syndrome where you think
sure.
you're a trader, but are you a trader?
Right.
So that's when I started to put in a lot more work of, okay, let me analyze all the trades that I took, and let me look at what I did wrong and what I did right. So I was quickly able to analyze, okay, most of the times where I was wrong, I was entering trades I didn't really understand, meaning I was entering because I had FOMO. I was entering because I didn't want to lose, so I would average down. And then I would enter trades because I was just greedy, meaning you're on a winning streak. You're winning 3, 4 days, 5 days in a row, and you think you're invincible. So I was trading basically on my emotions on the trades I was losing. So what I found out is that if you can kind of analyze your emotions in real time when you're about to click buy or sell, you have to really be objective and see, is this actually the best decision for my account, or am I just
Mm.
scared, or am I greedy, or am I just feeling some type of way?
Yeah.
Right. Once I figured that out, which thank God I figured out quickly, then that's when I started to really grow my account very efficiently. So
Mm.
I quickly realized that. And then now the other side of the coin is you study the trades that worked. You study the small sample size of 1 year. And I realized that, like I said, most of the gains were just from a few trades, a few very high quality trades that ran for, days to weeks at a time, where
Mm.
you kind of spotted the overall trend versus trying to just scalp for a few $100 or $1,000 a day, which can work. There's nothing wrong with that, but I found that what works for me is being in a trade that has the potential to run for a while versus having to be right for just 10 or 20 minutes.
When you say what works for me, do you mean, did you try the other way?
Oh yeah, yeah, yeah. I've tried it all. Yeah, I mean, I've tried the scalping. I've tried the daily like monetary goal, because in the beginning it makes you feel safe to say, okay, I can make $500 a day, because then you can calculate how much you can make in a year.
Yeah,
But
sure.
like I said, like it's so hard to determine how much you can truly make, because every year is different. The market could be in a bear market, you could be in a bull market. You could just have an off year too. So
Could you elaborate on why you think not why you think, but why you're saying every year could be different? What have you experienced, since you've been trading since 2010? That's over 15, that's 15 years. Kind of share some of that experience with some of the audience who might not understand what you really mean by that.
yeah. So for example, right? Like my first year, I got lucky, made 100 grand. Right. My third year, made $1 million. So if I had that daily monetary goal, like from year one, where I make the 100 grand, and I tell myself, year two, I'm gonna match that. I'm gonna make 100 grand again. And sometimes for some people, they're okay with that. They're okay. I hit the goal. Okay, now I'll wait till next year. I'm going to scale down. I'm going to take it easy because I hit my goal. If I had that same mentality, I would never have gotten to a million by my third year. And, this is my 15th year now, right? And November and December of last year, right, recently, after Trump got elected, I made more money in those 2 months than I did my first 8 years of trading.
Oh wow, cool.
Yeah. So that's why I say like sometimes you limit yourself by making these goals versus looking at what the opportunity truly is, right? Like if you are early in Netflix or you're early in Apple or Nvidia or Tesla, if you understand the opportunity in front of you and you're able to just objectively analyze and understand your risk, you'll make way more money.
So, would you say your primary focus then would be swing trading?
I primarily I do day trading. I do options. I buy shares for swing trading. Do I swing trade options? Not generally, no. Yeah,
Okay.
I have a kind of keen ability to uh, I guess time the market for weekly options. Like
Okay.
I've been running like a trading service for about 6 years, and since I've started, I've alerted probably 60 500 plus trades, and the win rate is like 70 to 73%. So
Okay.
my ability to kind of day trade is, I would say, very strong.
Dude, I'm curious because so what you mentioned earlier though is you're very patient and you only place few trades, and that makes sense. Like it totally makes sense, and because we realize what makes the most money is a certain select few. So you only targeted those. So that makes total sense. But that would be more of a swing trading style because you're not day trading, right? Because if it's only a few trades every now and then. So I'm just curious on like, what does that mean? Like, what do you mean?
Okay, so basically, like when I first started, right, your
Mm-hmm.
bankroll is so small that you can't jump in and out every day, right? Like for example, like when you have 6 grand, um, you're limited to just a few trades a week by the PDT rule, right? So in the beginning, you can't jump in and out every day. So my strategy in the beginning to truly grow an account was that of focusing on just high quality trades. And yes, some of them were swing trades, but some were also, I guess,
Ah,
day
okay,
trades
that makes
in a
sense.
sense. But like now that my bankroll is much bigger, right? I have the ability to trade more frequently. You have the ability to take more shots, right? But the what I did in the beginning is how you scale an account to get it big, to get to this stage of where you're able to take more trades. Um, like me like trading X amount per week, it can be the same stock, but just multiple times. Meaning, let's say Tesla breaks out above, let's say 400.
Mm-hmm.
So I could play the 410 strike, the 420 strike, the 430 strike, which I've done. Like there's weeks where, single weeks where I could trade this 10 strikes on the same stock. So it's 10 trades, but it's technically the same trade, meaning
Gotcha.
you're rolling into more profits. But
Yep.
am I taking 10 different trades on 10 different stocks? No.
No, you're like you're
Yeah,
playing you're playing the big picture.
exactly.
Like
Exactly.
so
Yeah.
you might be day trading it, but you're playing the big picture in your head. So
Yeah.
and it's all one trade, even though it might take a couple of days, and
Yeah,
you might be
exactly.
scalping here and there from those couple of days. That makes sense. So
Yeah.
it's like, yeah, that makes total sense. If I understand correctly, the big picture definitely matters for you, as you mentioned before, support and resistance, and then now you like to trade multiple positions within the big picture of that play.
Exactly. Yeah.
Cool, cool. You know, I'm curious because were you studying trading before 2010 at all? Like, were you like, because I know people are going to listen to this, brother, and they're going to be like, no way did this guy start in 2010, just kill it. And just blow up. What happened in the second year? Cause you didn't mention the second year. So there had to be difficulty somewhere, right? Like, so give us some, explain to us on that, just cause I just really need to understand like where the challenge was, or was there a challenge? Maybe there wasn't. And maybe I'm,
Yeah. Yeah. No.
wrong
No.
here.
No. Like I would say like I'm fortunate in the sense that I kind of had a natural gravitation towards this world. It kind of fit my personality in the sense that I've always had a big risk appetite. Even when like I never had money, I would spend it or I would gamble with it or whatever it
Yeah.
is. It would always just go out, right? So my kind of attachment to money, I never had one. It never associated with my personality. I don't. I always made the best of every situation, whether I had $1 or $1 million.
Yeah.
So um, my ability to take risk was much easier. So I've been fortunate to be able to grow it so quickly. But I think that with the right personality trait and the right risk appetite, if you have those two characteristics of, high risk, and you have the competency to pivot and adjust when you make mistakes, then you can become very successful.
Now that's interesting. How do you feel? What happened in your life that helped you kind of build that risk appetite to
Yeah.
also, because you mentioned you had no money, you never really cared. Because I get it. I get the idea of, separating yourself, and that makes sense. And that makes sense how you went through that. But I'm curious, like, how did you learn that, and how did you build that muscle?
You know what? I think it's just something that's always been with me, where I like, the way I see things is, there's things that you can lose in life, or there's a lot of things you can't control. Um, but with money and having a job, you can always make it back, is the way I think. Like, if I lose all my money, early on, I always tell myself that you can make back. You get fired from a job, you can get another job, right? But there's other things that you can't control that you lose, like, God forbid, a family member or a loved one. Like, you can't control those things. So I always told myself, as long as I have those things, then everything else is extra.
Ah,
So yeah, yeah. So I always said, even today, there's some days where a week and a half ago, I lost 150 grand in a day, which,
yeah.
of course it doesn't feel good. But I always tell myself, like, you'll make it back. You'll make it back.
Give people a perspective, because throwing numbers out there is relative, right? And I just want to make sure people can relate, because some guy might be trading $1,000 account. So like, if that's a non is that an acceptable loss for you? Like, as in like 1% of what you're, or like 1R, if you will, what you're willing to lose per day, per trade, a third of your max loss. Like, just give us relative sense, so that way someone who's watching this can really relate.
I would say 1% loss is the max you want to lose. Of course, it gets a little bit more difficult when you're trading, under 25,000. Like, those percentages don't relate. But, if I was trading under 25,000, I would say you don't want to lose more than 1,000 per trade. That's the benchmark, I would say, of being able to manage your risk properly. Um, because if you have $1,000 loss, you can make that back on a $25,000 account. But if you're losing 5 grand on a trade on a $25,000 account, you're putting yourself in a position where you're kind of having to crawl back now, which can take time.
Yeah,
So
absolutely can. And what I was
yeah,
curious about is more of like, so we can relate to you on what
yeah,
that $150,000 is. That like
yeah.
1R, like a normal loss for you,
Uh,
1R, or is that like multiple losses?
yeah, that was a little bit of a bigger loss for one single day.
Okay.
Like, a normal loss in a day, I would say probably closer to, like, maybe 50, 60,000.
Okay. Okay. So that
Yeah,
gives us more
yeah,
relatively. So like a 3R loss. So
yeah, yeah,
like losing 3 trades in one day, like, pretty
yeah,
much. That makes
yeah, yeah.
sense. Sorry, I just want to really understand, so that way, because like, if let's say I'm trader B and I don't have that risk appetite, well, I can still relate to you. So that makes sense. But look, man, I'm very curious, Brando. What is, I've been poking at this, and this is because this is for your own good, brother. I want to know, and now I'm learning some things about you, which I love. Has there been any recent challenges, or has there been any, like, what has been the biggest challenge, even if that biggest challenge might be for a week for you, or a day?
Yeah.
Some people, might take a little bit longer, because we have, everyone has different attachments to money, and it's very clear that you focus on those two priorities,
Yeah.
and if you have those, you're happy. Let's just keep moving. And you more so focus it as a tool. So, has there been any challenges at all? And just curious.
No, yeah, I would say the biggest challenge that I find with myself, even for someone that's been doing it for, my 15th year, is over trading. Meaning, like, for example, this is FOMC week, right? January 29th. And I know I probably shouldn't be in some trades during this week, but I know, there's that part of me that likes to gamble. There's a part of me that likes to have risk on. And I still struggle with that. Like, I'll just kind of take random trades sometimes just to see what can happen. And that eats up a lot of, not a lot of my profits, but it eats up a good amount of profits in a year when you're trading FOMC, whatever, 9, 10 times a year. And um, let's say you lose 20, 30 grand extra on top of each of those weeks where you should have avoided those trades. I found that over trading is something that it's very difficult, especially when you start making profit, you start making extra money, you want to throw those profits back in and you want to see it grow. The thing that I try to do to try to combat that is I try to be more disciplined outside of trading, like going to the gym, doing meditation, having a clean diet, just trying to do the right thing, treat people right. Like I feel like when I'm disciplined in that sense, it kind of comes full circle with trading and making sure I don't make the wrong decisions while I'm in front of the computer. So that's something that I've been working on for a long time. And it's like a muscle, like we talked about. That's another muscle of being able to control yourself.
So you mentioned earlier about the whole idea of, you'll scratch the itch, or, you overtrade here and there, but you can still stay profitable, which you show right here. But what I'm curious about is, what advice would you give for the trader who does overtrade? Like, how much smaller should they be overtrading on? Because it sounds like you kind of found that kind of formula for yourself. Like, you know what, when I trade this little itch over here, it's going to be much smaller than when I trade this, the actual trade. Could you share that?
Yeah. So my advice to people that overtrade is I would actually write out your list of trading rules on a piece of paper and put it on your monitor or right next to your laptop, and always have that in front of you. I think every morning before you trade and during the trading day, if you constantly have that in front of you, it'll be a reminder of what you should do and what you shouldn't do. And I think that's really important because when that bell rings, sometimes everything goes out the window and you're just like, fixated on the price action and
Yep.
you want to make money and all your rules go out the window. So that's what I have done in the past. I don't do it anymore. I probably should, but but that's what I did for a long time, from probably year 1 to year 8 or 9. I
Hmm.
always had that in front of me, and it really kept me in the game because those rules are designed to protect you. They're designed to make sure you don't blow up your account. And that is what I would do. Aside from that, over trading, I think, has a lot to do with discipline. So you have to ask yourself, how disciplined are you outside of trading? Meaning, do you have a routine, a regimen that you work on to either work on, your mind and your body to keep yourself in a sharp state? So I think that's really important. If you truly want to be a better trader, you have to live that life. You have to kind of be the person that you say you're going to be. So keep a healthy routine outside your trading life, and I strongly believe that it'll really help you with you being disciplined and not over trading when you're in front of the computer screen.
I'm very curious before we start to wrap this up, because I really feel like I slipped through the cracks here earlier on asking this question. Did you pick up a book, or did you go to YouTube? Like, how did you learn to trade?
Yeah, so I didn't read any like books really, or there's, and even on YouTube there wasn't really much back then.
Okay.
But it was more of me just opening an account and trying some penny stocks, trying options, quickly learning that you can lose money very quickly, and just kind of just analyzing charts, going on Twitter. There was a couple of guys back in the day that, they were like technical analysts. They did a lot of TA.
Hmm.
So, it's kind of just analyzing patterns and just looking at patterns, and me looking at a chart. Like if you pull up the S&P, there's, it's a constant trend higher forever, but just identifying those pockets of momentum and important levels, and just realizing that, okay, well, I don't need 10 indicators to tell me this is going to go up. So yeah, early on, I just realized that that's probably the strategy that is the most simple to learn and the easiest to replicate in terms of finding profitable trades.
Did you track all your trades like on Excel, or just curious? How did you track back then?
Yeah, yeah. So I use a Mac, but it's called like Sheets. I think it's
Yep.
called
Yep.
like, yeah, yeah. So basically, like, it's a simple like entry, exit, ticker. time of entry, time of exit, position size, reason for the trade, did the trade work, what was the percent gain, percent loss, and just tracking all that data and seeing which trades had the most strikes in a week, meaning, it was a profitable trade, you roll to a new strike. Those trades ended up being the best trades. So I studied those trades the most. Like, for example, like if I took 5 or 10 strikes of one ticker in a week, that's the trade that you study the most.
And so I want everyone to hear that, because at the end of the day, track all your data, make sure to review it, and then that way you can find your, what works for you. So I'm sure people are going to have a lot of questions, Brando, and they're going to want to reach out and learn more, maybe even listen to your spaces in the future if you do one. So how can they learn more about you?
Sure, yeah. My X account is Elite Options 2, and you can also find me on Instagram at Elite Options Trader 2.
Perfect. Well, look, Brando, I appreciate you, brother, being here and sharing your journey with me. And again, thanks, man.
All right, thanks for having me. Appreciate it.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.